Happy Friday, traders. It's 8:01 a.m. Chicago time on the 5th of February 2021. This is episode number 1932. It is non-farm payroll day, unemployment day here in the US. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, looking at what we're coming into today, clearly risk on, relatively strong. Here's the convergent trading pre-market summary sheet. You can see the allocation is to the indices again, to risk, with the Russell leading the pack this morning. The pecking order in terms of what is strong on my quote board. Silver again taking the lead, up 1.3%. Crude oil trading at 56.96, up 1.3%. The Russell catching up after lagging yesterday, up 0.8%, or 17 points of Euro stocks. The Dow 144, 0.47%. So there you have it. The allocation is to risk this morning. You can see that the treasuries are a little bit lower. I'll show you in a minute. I'll show you what the overview it looks like just across several days, so you could see how this correlates. Again, the metal's pretty strong. Copper being a metal that is not used as a safety tool generally, but as an industrial tool, tends to move up with the market. Copper symbol HG. By the way, there's a very strong interest in silver. Silver, as you saw earlier this week, popped and had an 11% up day. Silver getting a whole lot of attention, including the metal itself, silver coins. Always remember that derivatives trading is not suitable for all investors. But if you're interested in silver, there is a micro silver contract on the CME that you can trade. I encourage you, of course. I own a brokerage. I'm a 100% owner and founder of EdgeClear. I'd encourage you to reach out to edgeclear.com to see what that costs if you're interested in that metal. Today, the big news is that the U.S. Senate passed the budget plan, Biden's budget plan, to push forward with a $1.9 trillion COVID aid package. This paves the way for pushing it through Congress and getting it signed into law. The market's really loving this. You can see that we've been pretty much vertical since the time that this became a strong push and a likely pass, as the Republicans resisted it. But they don't have a majority, so it is being pushed through. And of course, this is the stimulus the market's been waiting for since the election. This morning, we did have the unemployment release. The non-farm payrolls came in at 49,000 versus 105,000. The interesting thing is the prior for December was revised down pretty dramatically. I don't know how you get that so wrong, but the prior was pushed down 87,000 jobs for December. There's just something goofy going on there. The unemployment rate was estimated at 6.7, came in at 6.3. Change in private payrolls, 6,000 plus 6,000, estimated at 163,000. So that was a big miss. We also had U.S. balance of trade. I'm not going to get into more than that. Currently, the S&P has traded 198,000 contracts in the overnight session. We are in a multi-distribution trend up type of profile, 26.25 points of range. The overnight inventory is about 72% positive, 72% long. So that's where we stand. Let's jump right into the review segment so we can get to talking about today's market. Yesterday, the way we were opening, as you could see in green here, we're opening right on top of the high volume nodes that were created over the last couple of sessions, and this would act as fuel based on the auction process. We would expect this to behave like fuel, but the inventory being high, the expectation was a little pullback and then a push to minimum to a 45, the MC point of control for the last 2 weeks at 45 was expected to be tackled right here. I wrote that number there. It's on the chart here and here and here and here. Like, I don't know how much I could have talked about that number as I did this week. From the beginning of the week, I've been talking about the market very, very likely taking a trip to the 45 and testing it. And yesterday, not only did it go to the 45, it pushed right through. This is yesterday right here, just as expected, an open auction back and forth. You could see it pushed up, down, and then finally extended up, pulled back to VWAP in mid, and then started to make its walk towards that 45,000, which was right here. So once it tagged out 45,000, went to 47, had a deep pullback to where? Mid VWAP again, mid VWAP. You've seen that all week long. Nice little pullback there, and then finally it pushes through to the mid-century figure, 38.50, consolidates there as expected. 38.50 was this pink line here. You're wondering what this pink line is. This is what's called a naked volume point of control. NVPOC. This is the most traded price from the all-time high day that has not been touched. Since it was made, and we went right to it yesterday and held to the tick, consolidate sideways, and then finally squeeze through, pullback. Nice little setup to get long here. Once we get through the NVPOC, pull back and then squeeze, we consolidate, and then we finally blast off on the close. Here are a couple of things to pay attention to. Look at these distributions. This is like a kind of zigzag, a vertical zigzag. It's a market that is going from balance, so balance, imbalance, balance, imbalance, balance, imbalance, balance, imbalance, balance, and then it finished at highs. With the finish that we had yesterday, there were just no sellers found. We closed at the high. We ran out of time. The auction did not find its sellers. Remember, the auction's job is to push as far as need be in order to find those sellers and pull back. It did not find sellers, so we expect this to continue higher overnight. Absolutely. The edge is on the side. It's not guaranteed, but the edge is on the side of the longs here, having pushed through the prior all-time high at 38.62 and a quarter in the RTH, and finishing at highs. It is very, very likely to continue. Here's an interesting thing. The top pane here is the ES. This is the ES right here. This is a 1-minute chart. And the bottom pane is the volume delta. So the yellow is the very large lots. These are 100 lots or more. These are assembled or consolidated lots based on the tick ID of those fills. So what this is doing is it's taking all the fills that are correlated to one order and putting them back together. And this is not going to look anything like your feed probably, unless it does the same thing, unless you have an MBO feed that pulls that information. The large lots are everything that is greater than 9, so 10 lots to 99 lots, and then 9 lots or less are in orange. And as the market was above, now remember, this is the 0 line for the delta. This is the opening print. as the market continued to push higher and accelerated to the buy side, the delta pushed higher early on and then has just been falling and falling and falling and falling and falling, accelerated to the downside near the close, and then finally accelerated to the upside at the close, with the very large lots selling into large lots coming in and in line with price. So to me, this looks like it's hard to read into this. This is all-time highs. This is actual volume. We don't know what's being hedged. You know, they may be long a lot in equities, ETFs, equity options, index options. Who knows? And they are selling futures as a hedge. We don't know what the intent here is. But the fact is, it's not, the relative delta is not moving with price yesterday. So we expect this kind of trend to slow down, to stall a little bit as we come into today. So that's important to note. Now, carried over into today's session, we have 203 contracts, 203,000 contracts traded, and we didn't spend very much time in yesterday's profile. As soon as we reopened for the last half-hour block, we went higher as expected, and we continue higher in an uptrend. The overnight profile is a multi-distribution profile with the point of control near highs. It's a weakish high that we have in the overnight session at 38.86 and a quarter, and we did pause at some of these measured moves here. We did take a pause. We stopped just short of it, pushed through, pulled back to it, and are holding steady here. We've moved. We're opening in a gap up, and overall the delta is with price. Again, the overnight inventory is long about 77%. So this informs us that there may be a pullback on the open since we're gapping up, but overall there's a lot of strength here. Here's where the 45, 48 comes from. This is a big area. I mean, I've covered this in every Trader Bite this week. We've established a really nice MC point of control at 38.30. A lot of volume. Look at the kurtosis on this. Very, very strong, tight distribution of volume around that 38.30. This was the base from which we rallied yesterday. Very, very systematic. We moved, so yesterday's volume did not contribute to this MC point of control. It's just 2 days of volume that contributed to this, and it's a nice little base that we run up from. Just remember, it may not mean anything to you right now, but it does mean something on the way down, and markets tend to gyrate and pull back as the market discovery process, the price discovery process continues. So we're opening in a gap at new all-time highs. The expectation is it's likely to come back. It's likely to come back and test the prior range, probably test this 45, 48 area as we are trading today. Non-farm payroll, characteristically fairly muted after the open. It tends to do its move early, the first hour, hour and a half, and then it gets pretty quiet until the close as the books get squared up into the weekend. Okay, so let's move on to what's expected for today. So that's basically the story or the narrative of what has happened so far. So, what are we looking for today? Let's turn on our stock zone levels. For today, all-time highs, so your guess is as good as mine, flip a coin. But the inventory is not 100% long, but it is relatively long, expecting an open auction at the open. A very brief open auction. I'm not expecting chop for long. I'm looking for responsive selling. to pull back to yesterday's high, to bring us back to the 68 area. Consolidate in here, poke through, and potentially get to 45 before it catches a break. So I'm looking for this thing to reverse back down before it bounces and we finish inside of the prior day's range. So I'm expecting it to finish somewhere in here at new all-time highs. The way this is built up and the way it's kind of generated its delta, I'm looking for responsive selling. The secondary open auction, as you would have guessed it, pulls back slightly, impulse up, new all-time highs, pushes through to the next measured move to 3,900, consolidates at the 3,900, pokes through a little bit, and then continues and then holds the line at 3,900, expecting a lot of action there. So that's where that stands. One thing I wanted to do today, which I forgot to do a little bit earlier before you take off, is this is that Friday where we ask, where are you at? Where are you located? Please take a moment. I know it's late in the session here. I'm keeping these Trader Bites brief, so take a minute right now. If you're on YouTube chat, if you're on Periscope, take a minute to type in your city, state, country. The purpose of this is to help traders kind of look around and see the vast variety and diversity of who's watching the Trader Bite. The Trader Bite gets about 2,000 views a day, approximately 12 to 1,400 on YouTube, and approximately 7 to 1,000 on Periscope. So take a look around. You can scroll through this chat and see who's around here. Please do not share your email, your phone number, because anybody can farm those and bother the heck out of you. But please take a moment and just punch in where you're at. We're a huge number of people trading around the globe, and it's great to have you here, and thank you for being here. Have a wonderful Friday. You can keep typing, you can keep punching in where you're from for the next couple minutes before it shuts you off, but have a wonderful Friday. Keep your risk in check. I'll catch you on Monday morning. Take care.